All right, guys, back to work tonight. I know. I wish the weekend lasted forever, but it's time to get back to work tonight. It's Monday evening, after all. Got to get ready for Tuesday's trading session, right? It is, of course, February the 22nd, 2021. My name is Joseph, as always, and welcome back to your nightly newsletter. Now, if you're here for the first time tonight, it's great to have you with me because my job tonight is to help us find the best trades for tomorrow. That's Tuesday's trading session. I got a jam-packed video in store for you guys tonight. Charts are all prepped up in the background, as you can see. Got the E-minis. We got the oil and we got the gold on our radar for tomorrow. Speaking of tomorrow, got some big news. Got a Fed speech tomorrow. Got some big economic news on the schedule for tomorrow. Bit of a tongue twister there. And of course, some pretty big moves on today's chart. So lots of great opportunities as we go into Tuesday's trading session. Before we jump in, then we'll get our hands dirty on these charts. Before we get started, I just want to make sure to remind you, if you haven't done so already, make sure you subscribe to this YouTube channel. You know, we publish this video newsletter every evening, Monday through Thursday, with our best trade ideas for the following day. I don't want you to miss tomorrow night's newsletter, so make sure you subscribe to our YouTube channel. And when you do, hit that little bell icon so you always get notified every time I publish something new. And also, too, if you have any questions at all tonight, you can always drop those questions in the comments section. I'd love to answer the questions for you. So you got any questions, drop those questions for me in the comments section below. And, you know, I really appreciate you guys tuning in every evening and watching this video. If you enjoy this video newsletter as much as I enjoy making it, do me a big favor here tonight. Hit that like button, that thumbs up button for me here on the video. So always appreciate you guys tuning in, supporting this YouTube channel. Please make sure you subscribe. Drop those questions if you got them in the comments section below. Hit that like button if you guys enjoyed this video here tonight. But enough of the introduction, though. Boy, time is ticking. It's Monday evening. We got Tuesday right around the corner. Got a lot to cover here in tonight's video newsletter. Of course, got the E-mini, got the crude and the gold here. E-mini here right now. The S&P is back inside of a trading range. It's basically one big range after that big drop in the overnight session. It's basically a bear market into a trading range right now. I would love to short some pops here tomorrow using some buyer failure patterns. So we'll talk about that in more detail here in tonight's video. So if the price pops up, I'd love to short some of these pops. If the market runs lower, though, on the S&P, I definitely have to be careful because, as you can see, there is lots of overlapping support levels here. So as the market goes lower, I'll be looking for traps to get short, and I'll also be looking for crown reversals to buy off the low. So S&P, lots of really great opportunity on the E-mini for tomorrow. We're going to grab a lot more detail on that here as we crack this newsletter open here this evening. Right in the middle on the oil, I think the gig might be up here on the oil right now. We keep hearing lots of good news about vaccines and all kinds of good COVID stuff right now. And, you know, combine that with some production cuts and you got oil still ripping higher here. Got a bull wedge on the oil right now. Wedges are a huge clue. Wedges tell me one very specific type of market personality, and there's a lot of different ways I'm going to trade this. I don't want to be too aggressive up here because we are, as you can see, running into a measured move. We got some major resistance up here, but as I mentioned last week, though, there's plenty of space to go higher here. So I would love to see a breakout on oil going higher. We got 65 within striking distance here on oil. And honestly, I'd love to get a nice deep pullback, right, down into that trading range. Now, deep pullbacks do come with some strings attached, right? So we'll talk about how to trade those deep pullbacks tonight in this video. And then how about that gold? Well, you know, they were talking about the new, don't call it a bailout, vaccine stimulus, right? Or the COVID stimulus, right? So we heard from the House today. I believe the House gave the green light on vote later this week for that $1.9 trillion plus, right? Asterisk plus, stimulus package. Obviously, that's going to have an impact on gold because when you flood the market with $1.9 trillion in dollar bills, right, it's going to make the gold spike along with it, right? Dollar comes down, gold goes up. So we're bullish on the gold right now. Gold's kind of an interesting spot right now. As you can see, we're kind of right into a measured move. We got major resistance overhead. Honestly, the plan on gold is very similar. We have a lot of open space above us and a really easy magnet up up around 1850 on the gold. We're talking about two different types of breakout patterns on gold for tomorrow as we go higher. What I really hope, though, is I'd love to come down right into that battle zone and buy a nice deep pullback here on the gold. You'll notice I've got a channel coming up here, so I do want to look for a shallow pullback. Remember, shallow pullbacks are great, but just like deep pullbacks, they've got some rules we got to follow. So if you're trading gold for tomorrow, you definitely want to stay tuned here tonight on this video newsletter. We'll crack this thing wide open and get the S&P, the oil, and the gold ready here. Before we jump into the charts, though, and get this thing really moving here tonight, though, let's make sure we take a look at the schedule this week. It's important that you remember this is the end of the month, or the last week of the month of February. I realize that most months have 30 days, but remember, February is that weird, it's not a short month, right? But we only got 28 days, right, in the month, which means this is the last week of the month. Why does that matter to us? Well, what happens is as we go into that Wednesday, Thursday, Friday this week, we're going to start seeing desperation trades, right? The risk on, right? The risk tolerance increases because there's a sense of urgency, right? As we go into the end of the week, the markets, they get, if you were trading at a big trading firm, or if you were trading other people's money, right? Not just your boss's money, there would be a sense of urgency in the pit of your stomach to kind of get your numbers in shape by the end of the month, right? Everyone wants their numbers in the green. Everyone wants to, to beat their number at the end of the month, especially if you're being held accountable to a boss, right? Or other people's, right, assets that you're managing. Obviously, most of us are individual traders, so we don't have to deal with that. But, the big fish in these seas, the big market makers, they do have to worry about that. And that does create a sense of urgency. With that sense of urgency, markets will be more risk tolerant. You'll see a lot more volatility. A lot of things you just wouldn't see earlier in the month are going to start to happen here towards the end of the month here. And then, of course, comes end of this week. So be aware of that as we go Wednesday, Thursday, and Friday this week. Another big important factor you want to keep in mind is we got Jerome Powell, right, tomorrow and Wednesday. He is definitely going to be on our radar this week. This is a big deal. It is the semi-annual testimony on Tuesday. Tomorrow, he's got it at 10 o'clock on Capitol Hill, and on Wednesday at 10 o'clock, right back. I believe it's the Senate tomorrow and the House on Wednesday. So it is going to be one of those scenarios where we're looking to trade around this speech here this week. The one tomorrow will be a lot bigger deal than the one on Wednesday. The one on Wednesday, I believe, is the one in front of the House Oversight Committee or House Banking. I always get them mixed up here. But the one on Wednesday is the one that usually won't be as dramatic because we'll already kind of know what's on his mind, right, come Tuesday afternoon. So Tuesday, tomorrow, of course, as we go into tomorrow's session, right, just be aware of that, right? That is kind of the big news of the session tomorrow. What this does is it really puts a premium on the price action before 10 o'clock and after about 10:30. So really be aware of that. The markets will oftentimes kind of pause around 10 o'clock. They'll wait to hear the speech. They'll wait to see the prepared testimony. He will release his prepared remarks ahead of time. The market will usually chill out a little bit around 10 o'clock, and then by about 10:15, 10:30, we'll start to see things pick up again once the market kind of gets comfortable with what's on his mind or what he said in his opening remarks. Remember, though, this Jerome Powell speech, it's going to be, 15, 20 minutes of him speaking, prepared remarks, and then he'll get the barrage of, the politicians, right, asking what appear to be completely random, goofy questions, right? But that's what happens here tomorrow. And again, this happens a few times of the year. This is the stuff you do have to make sure you're paying attention for. They happen a couple times a year, 10 o'clock in the morning, and it's happening tomorrow morning on Tuesday morning. Now, of course, tomorrow morning we'll be in our trade room at 8 o'clock, so we'll try to get after it early. We'll trade around that 10 o'clock and then And usually by about 10:30, 10:45, that's usually where the best setups are going to come tomorrow. So if you could only be at your desk for a couple hours tomorrow, don't try to, obviously want to get there early, get charts prepped up, get in the mindset of trading, get ready for the trades. But if you were busy tomorrow morning, don't stress too much. After he speaks at 10 o'clock, usually that second half of the morning is going to be the most active time to be trading. So something we do want to keep an eye right here for tomorrow. So 8 o'clock Eastern time in our trade room, we'll trade around, right? We'll trade around that Jerome Powell speech later on in the week. And a bunch of news coming on Friday and Thursday. We'll talk more about that as we go here. But remember, as the week gets later, the volatility kicks up because the end of the month. And for tomorrow, make sure we're trading around, not on top of, right, around that 10 o'clock Jerome Powell speech. All right, that is it here for me on the news. Let's get back to our charts tonight. Got the S&P, the oil, and the gold. Let's have a look here at the S&P first, jumping into the E-mini. What's the big takeaway here on the E-mini here today? Well, as you can see, the market began with a little bit of some craziness there, right? In the overnight, well, technically that was Sunday evening, because you'll notice a weekend gap, right? Market closes at 38.99 and a quarter. It opens way up top, right, and comes back down and closes that gap. In fact, you can see what happened, right? The market kind of opened up with a gap. Market ran lower, ended up going into a trading range around 9:30. Spits out the other side. They complete the pendulum swing. Pretty crazy, right? They complete the pendulum swing and they take out the gap again, right? They barely missed the round number, but they take out that gap. Now you'll notice the bears are back in control again, and I would imagine these bears now have one thing on their mind, and that is to get those lows at 38.61. Right now, we're going to keep that weekend gap area. And I realize that gap has been filled, right? It's been filled a couple times already. It got filled here, got hit here, got hit here. So I'm not saying this gap has not been filled, but I'll tell you right now, that 38.99 and a quarter, that 3900 area will likely be a magnet for the rest of the week. So we know the bears have control, right? Strong move down into a trading range. We want to sell at resistance areas, right? Resistance areas above the range. Okay, market spits up, bears get short, and now, of course, we're headed back down into that trading range, trying to undoubtedly finish off that move back down to retest that low. The one challenge I have right now is I don't want to trade inside this range. Ranges are magnets. Ranges are balance areas. I really don't want to trade in the middle of this range. I would love to get short above the tops of the range, right? Up at resistance areas overhead. I would love to, as the market's running lower, I'd love to try to find a way in as the market's going lower, but I'm just simply not going to try to force trades inside of this trading range. So again, as I mentioned earlier, I'd love to short a pop on this. And you'll notice what I have here on the chart. I've drawn a trend line that originally was a support trend line coming off of that low. I'd love to see if I could get back up, right? And really, to be honest with you, I'd love to combine this little high right there, right? That little guy right there, I'd love to combine that trend line with it and get in on a trap, right? A little trap high. Now that trap would then maybe lead into a buyer failure and back down again. My only concern about that buyer failure is it might put me too close to the middle of that trading range. What you want to think about is you want to try to get short here at resistance above the range, but not inside the range. So if that is the case, it may be one of these situations where we have to look for that trap, kind of a double back-to-back, right, trap there to get short, right? So trap one and trap two. If I get the market pulling back here, it's a trap high into, again, probably going to have to be a trap here, back-to-back traps, just to avoid trading inside of that trading range. Now, I mentioned earlier that weekend gap would be a magnet here for us. What if the market runs higher here, takes out that high? Can I still sell this thing? I can, but now what I want to do is I want to respect the bull's momentum, and I want to let him try once, let them try twice. And then once I have the buyers trying a couple times, then I know their stops are just ripe for the pickings, and I can sell right into those stop losses, right? I'll use that failure pattern for that one. So again, just kind of quick recap here. We've got this kind of strong move down, shallow pullback, lower low here, that trend line coming up, right? So I'd like to combine those two for a trap. And then of course, once the moving average comes back, I'm probably not going to have enough room here to take a failure pattern, right? That's a pretty typical setup. It's a bull trap above a prior high, right? Bull trap into a buyer failure. The problem is, again, that's going to put me right inside that range here. So I'm thinking maybe what I do is I wait for 1, 2, and then go for that trap, right, above that high. So now we're thinking trap 1, right, and trap 2, right? So 2 traps. What all I want to do here is avoid selling inside of that trading range. And again, if the market was to, for example, pop up and try to get after that high again, right? Because after all, it's a pretty strong move higher. Anytime we see a strong move in one direction, it's a good chance it'll try to retest those highs. It's come back and taken out those lows already. So, it's probably not that big of a chance. But again, with that weekend gap up there, we know that's a magnet. We know the big round number can be a pretty sticky area here. So if it doesn't make it a strong run higher here, can I still sell it? I definitely can. I want to use a failure pattern on this one, though. I'm going to want to, because this market will obviously be very bearish at that time. There's a gap acting as a magnet. So let those buyers try once, let them try twice. And then once we have them trying once and twice, then we've got them right where we want them, and we can sell right into those stop losses. I love trading failure patterns. Failures are really our bread and butter in our trade room. And speaking of which, right, I go into a lot more detail. This is kind of a nested variation of that failure. If you want to learn all about failure patterns and trap patterns, those are 2 of my 4 favorite entry patterns. I cover all the entry patterns along with all the rules I use every day in our trade room. I cover all of that in our free trading course. If you haven't done so already, if you want to get a deeper dive into all the pattern setups, into everything we're talking about here tonight, I go into a lot more detail. I'll put a little pop up there for our free trading course. I got to kind of move quickly on these video newsletters so the videos aren't too long, but a much deeper dive though for you, along with hundreds of examples of how I apply those setups to our favorite futures markets. They're all covered in that free course. So pause the video, grab that link, get registered for the free course, and I'll send you lots of useful information. That way the next time we work together, right, tomorrow night's newsletter, and I say failure into pullback or failure to trap, you know exactly what I'm talking about. So grab that free course linked up there in the upper right-hand corner. Now, at what point, if the market runs higher, at what point can I be a buyer now? The buyers have to hold a pullback, right? Right now, look, every time the market went higher, the buyers keep struggling to hold pullbacks, right? It's not a bull market. This is a bear market. And again, the bears are hunting for that low. So if the market runs higher here, this is exactly why I don't want to buy that pullback, right? Because the buyers simply don't have control. I'll wait for those buyers to try a couple times, give myself a better fighting chance, and I'll use their stop losses as fuel, right? With a failure setup. But if we can make the run higher, if the buyers can show something has changed, right? Again, we've seen some pretty darn good numbers out of the COVID numbers recently. Heck, I saw today they're thinking about opening up movie theaters again in March in New York City, right? We never thought that would happen ever again, right? Kidding, obviously. But, so the numbers are coming down. And boy, did you see the numbers from Pfizer today? 99% effective at preventing the most significant symptoms. And the big one was 88% effective at eliminating transmission. Those are pretty convincing numbers here, right? I would imagine that combined with some new stimulus, going on, right? Some little, I would imagine that could possibly send this market running higher, along with gold and along with the oil as well. So if the market does pin higher here and they can hold that pullback and really jump off of that moving average, again, they didn't do it here. They didn't do it here. Can they do it here though, right? Got to prove it to me. If I can get that 1, 2, 3 breakout, now what I can do is I can mark up that high. I can bring it down to that low, and I can buy. I always sort of buy the first pullback, right? The first pullback off the low of that channel. Now, where do we think the market wants to go at that point, right? So 1, 2, 3 reversal into a hidden channel pullback. Where do they want to go? Well, there's some big levels up top, right? Today's high, 14.5. But let's not forget, right? You got those big highs way overhead here. So I would imagine this 39.35 area, that seems to be a very likely objective for tomorrow. And then if they really get this baby pumping higher here, that all-time high at 39.60 and change up there, right? That seems to be some pretty easy milestones here for these buyers. So we know how to, we have a pretty good plan here now if the market runs higher here. If the market runs lower, right? Remember, we're going to stay out of the middle, right? Stay out of the middle. If we go sideways here, not a lot changes, right? If we go sideways here, well, let's put it this way. If we go sideways here, that actually makes our job easier because now that trend line now, I can combine that trend line along with a buyer failure pattern. I'm no longer worried about selling into, right, the trading range. So I'll tell you, it would almost be better for us, easier for us, if I could get a little range going on here, going sideways overnight. Then I've got all my levels of resistance up around that 88, 87 area. And all we got to do is wait for that market to go sideways, wait for it to poke its head above the range. Don't buy it, right? Wait for that pull back. If they can hold it, good for them. If they can't, though, yeah, that's a great short setup, right? Going lower. Again, a failure pattern. I talk about all these patterns in that free course. Grab the little pop-up there in the upper right-hand corner. And then again, if they hold the pullback, right? If they hold it, 1, 2, go. Now we know it's on, right? Mark the high, mark the low. First test is the best test, and we're buying off the low of that hidden channel, right? Now, what if we go lower, right? What if we go lower here? So what's the problem? If we go lower, the problem is not direction. We know the direction of this market. The problem is location. Now, you'll notice there is quite a bit of green down here, right? You would think it's St. Patty's Day here already, which is not too far away, by the way, right? But we got the quite a big rectangle, right? A lot of green down there. There is a lot of support here. These are those prior all-time highs. If I go back, and you're not going to see me do this very often. Where's my 4-hour here? I got one right here. There you go. There's a 4-hour. I don't use time charts very often, but this one really looks good to me, this 4-hour chart here, right on the E-mini. You'll notice this is right where we are right here, right? We're sitting right at this, and honestly, it looks like a collection of levels of resistance, right? The big top, the lower top, right? The bigger top coming down. So, in all reality, this whole area is an area of, it's kind of a support zone. As you can see, though, there is a heck of a lot of open space down here, though, if this thing starts to fall. We have a lot of potential downside here for the bears. But, again, the kind of moral of the story is we don't have much. Well, there's a lot of support here, right? There's a lot of support right at that area. Those are those prior all-time highs right there. So why is it important to me? Well, because as I go lower, I've got to really be careful getting short here, right? I got to really be careful going short. And I really can't buy this market either very easily because we're so bearish, right? So as the market goes lower, the one thing I'm looking for here is first of all, can I get in before we get down to that low? If I can get us down, right? If I can get a move lower here and get in on a trap entry, traps are going to be your bread and butter before you get down to that low, right? I'm going to mark up that low, mark up that high, and I'm looking for a trap entry. Again, you're going to want a trap. You can see I'm kind of drawing in this little hidden channel here, right? You're going to want that trap because you're concerned about selling too low. Anytime I'm worried about selling low or buying high, right? Either or, I focus on trap setups. This is a really good example of how a trap can come into play here. Now, if the market rolls down and hits that low and then bounces here right now, okay, that's very much a possibility here for tomorrow. We take out that low and we bounce hard, right, off of that low. What you want to remember is this range is a magnet. So how do I protect myself? It's a very bear market. Could I sell this thing? Absolutely. What I would do, though, is I would look for another one of those nested failures, right? Let the buyers try once. Let the buyers try twice. See if I can get one of those little hidden channels off that high and sell back down from there. This will definitely be kind of a game time decision, as we always say, right? We'll know we have that when we get down there and actually see it set up. But that's exactly what I'd be thinking here, because if you got this big bear move down, there's a good chance if it bounces off that low, we just keep it going again, right? The problem, though, is you can't really guess. You can't really guess that way. Got to give the buyers the benefit of the doubt going back into the range. Let them try once, let them try twice, and we can sell short, obviously, right off of that new channel high. And then obviously if the market makes a strong run, let's say we go lower, we pull back and we really run to that low, right? If we just completely blow off the doors off that low there, again, we didn't see it back here, right? Didn't happen right there. They got that real strong move down and they couldn't keep it going then. So remember, there's no guarantee we push through that low. But if we can get this thing to, again, run, take out those lows, pull back to the moving average, go through that low, that is what I call a 1, 2, 3 breakout of this trading range. At that point, I can mark up that low, I can mark up that high, and again, we're looking for the first test off the high of that hidden channel, right? We call these 1, 2, 3 breakouts into hidden channel pullbacks. And remember, I'm looking for any of my 4 entry setups off the high of that channel, right? Could be bull traps, buyer failures, bear pullbacks, and of course strength moves as we go lower. Now, where would our targets be? Where would the market be trying to go if we take off the downside? Look at the wide open space down there. Now there's a big range down here, if you recall from earlier in the year, January's range. There's a big range down here, so if you look left, you can see it's pretty to see down there, that big range down there. So there's a lot of magnets waiting below us. Probably not going to see the market go from 3,900 to 3,800 in one day, but it's definitely possible for tomorrow. So we'll keep our eyes open on the move going lower. And then if we do take out those lows, right? If we do take out these lows here, how would I buy down here? What's the best way to buy off the low? Because after all, there is a range, and the range is a magnet, right? So how would I buy off this low? I'd have to be very patient, give the bears a chance to try twice, and I'll use what I call a crown reversal pattern off of that low. So I can definitely buy the low of this S&P, right? But remember, with momentum being so bearish as we go back to those lows, I'm going to have to give these sellers, give them 1 try, give them 2 tries, let them try a couple times, and I like to grab those traps right below that low for a buy going back up. I call these crown reversal patterns. They're basically let the bears try twice and grab that trap off the low, right? So now I get a pretty good plan here for how to buy the low and how to sell as this market's going lower. Don't forget, I go into a lot more details in our free trading class. You can grab that link in the upper right-hand corner, right? You can pause the video. I'll be here when you get back, but make sure you grab that free course here. Let's keep going to the oil, though. Running late here on time already. Let's keep going here on the oil. Lot to cover here tonight on the oil. What's the most important giveaway right now? The wedge, right? The wedge. So when the market opens up on oil, little weekend gap, right? Little weekend gap down there. That doesn't look like too big of a deal right now, but if this market was to reverse, you better believe that 59.04 will be a big deal here for us. As you can see what's happened here, if I get rid of some of these measured move arrows here, you guys can see where they were, right? The market pretty much opened up, ran higher, chopped around a little bit right in the pre-market, and made a strong run going higher, right? At this point, this is what I call basically a 1, 2, 3 breakout pattern, right? It's a very, very common 1, 2, 3 move. And what I like to do is mark the high, mark the low, and buy the first pullback. But as you can see, that didn't happen today. And that's why the wedge is a very, very important clue, right? Wedges are not as common, right? They are a little more common right now because everybody's all whipped up, right, from this pandemic. So the stimulus packages, the rate cuts or the production cuts, right, with OPEC. So this, when I see a market do something like this, it basically tells you that there's a lot of emotion in this market. And when there's a lot of emotion, you know that markets can really, they can V-top and V-bottom. So you would expect a market now that did not pull back, right? Think about this, did not pull back. Buyers were not given a chance to buy a nice deep pullback. Those buyers are still waiting for their chance to get in right now, right? Keep it in mind. And then on top of that, we go 1 leg, we go 2 leg, and we go 3 leg. So we're right there right now. So when I see a market like this, we know we're bullish. There's no doubt about that. You don't need me to tell you we're bullish right now. We know that. We want to be a buyer. And in all reality, I would really be careful being a seller in this market right now because of the good COVID numbers, because of the stimulus, because of all of these things happening, right? This is nothing new. If you've been watching me on the newsletter here for a few weeks now, I've been talking about how it's tough to sell oil, right? It's tough to get short on oil right now. Not literally, but it's difficult because you've got technicals that are bullish and a lot of fundamentals are bullish right now. But it's pretty obvious right now, though, these buyers have really put themselves in a position right now where it's kind of all or nothing. There was no deep pullback earlier today. Buyers are likely still waiting for a relatively deep pullback. But at the same time, though, we know there's a lot of emotion in this market right now. A lot of pent-up demand is kind of the buzzword right now. And if they can keep it going higher, there's no reason why we can't start to make our way up to that $65 a barrel. But first, we got to break through these major tops. Look where we are right now. Right? We're at a major top there from last week. So definitely a difficult spot to get long and a difficult market to want to short, right? It really is because of the fundamentals in the world we live in right now. So, ultimately, I don't want to buy too high up here, right? I want to try to buy a nice deep pullback. Now, as I mentioned in the introduction, deep pullbacks come with some strings attached, right? They're great because they give you nice, risk reward ratios, but they're not that great because momentum becomes a problem. Now you'll notice I marked up this range. Ranges act like magnets. So it makes sense for the market to try to pull back, go into that trading range, and then return back up to retest the high. That would make it very easy for all the buyers, right, to buy low, right? They've been waiting to get in here all morning. We assume most of the professional buyers are still waiting. Obviously, without pullback on this, they're still waiting to get in on this thing. So at this point, it's either do we get a shallow pullback, do we see a deep pullback? I would like to see a nice deep pullback here on the crude oil. Now, of course, if I do get that pullback right now, I'd like to get this thing down inside of this kind of battle zone, right? This range magnet here as we go. But as you know, though, ranges are magnets. So if I do get that deep pullback here, what's going to be the preferred entry technique on that deep pullback? It's going to be one of those nested entry patterns, right? Let the bears try once, let the bears try twice. And what oftentimes happens on these really deep pullbacks, right? Bears try a couple times and they get stopped out, is oftentimes this market will rip higher and you won't get a very common pullback. We oftentimes get a failure into a pullback combination. And what happens is you can basically buy into stop losses, right? Again, strong move down, give those bears a couple tries to keep this thing going. The range is a magnet. The bears try once, bears try twice. We know exactly where their stops are, and we can use a failure setup now to buy into those stop losses. Well, again, we oftentimes see the market pull right back. right, and give you a nice re-entry or add-on entry, right, into a pullback setup before we go back and retest the high. We may not get that tomorrow, right? The market may make that nice deep pullback. We may get that failure, but the market may now really run, right? It may really make a strong run higher. Now, when it does that, we oftentimes will find a shallow pullback just before we get back to retest the high, and I can look for a trap here. So those are some things to be watching for right here tomorrow. Again, a deep pullback down into that trading range, if you will. Bears try twice. We're buying right into stops. And then just before we finish off the move higher, right, it's that trap low to finish off that retest of the high. Now, another thing you might have noticed here is I've got this swing here. You know, sometimes what happens is, again, because this market is so revved up, literally speaking, right, revved up here because of the, the overall fundamentals, the COVID numbers, the vaccine information, we may not get that deep pullback. If we don't get that deep pullback, my biggest concern is buying high. My biggest concern is buying inside this wedge. Wedges are really difficult when they get really narrow like this. So if the market pulls back underneath that wedge, what's my concern? My concern is if I just wait for a failure pattern, it's not going to give me it's just not going to give me the edge that I want on this. I'd like to see a shallow pullback trap, right? So shallow pullback underneath the moving average, bears come in once, bears come in twice, and a trap here. So as you can see, it's kind of all or nothing, right, on this oil. Either we get a little trap low on a shallow pullback, or we get that deeper pullback into a 1, 2, and then into that trap as we go back up to retest those highs. So a couple things I'm watching for here on the pullback right now. What if we go sideways up here? Honestly, a sideways range up here would not be bad at all. If the market went sideways up here, this would just be a stamp of approval for the buyers, right? It would basically tell us there's a big magnet now right at the top of that move. And anytime I see a bull market into a trading range, what's the best setup? Find a support level below the range, look for a pullback below the range. Now, I never try to pick the bottom, right? I never try to pick the bottom of that pullback. What I like to do is I like to wait for the bears to come in and try to get short, right? A lot of times what will happen is I'll, back when I was a rookie, I would grab that low, my stop would go right below that low, they'd come over, stop me out, and the market would rip back higher. So a lot of times you try to pick that bottom there. It's a really stressful way to get into that trade. I make it easier on myself. I wait for that run lower. That short sets up now off that moving average, and now you know exactly where the stops are, right? Yeah, you're not going to make as much money on this trade as buying the very bottom, but it's difficult to finesse the bottom. It is. It's difficult to pick tops and bottoms consistently. Even a broken clock is right twice a day, right? Yeah, we can get lucky here and there. I'm not saying there's not going to be some times when you'll get lucky and pick that bottom, right? You'll thread that needle. But it's tough to get lucky every day. So it's just a much more reliable, if you want more consistent results when it comes to ranges, a lot more consistency when you apply those failure patterns, right, along with the lows, or again, along with support levels below that trading range. So if you do go sideways here, look for those buy setups, those failure patterns below that trading range. And then, of course, if we do pull back, right, and the market holds that pullback and runs, that becomes what? A reversal, right? So if the market doesn't go sideways, but if it gives a nice deep pullback, right, we hold that moving average and we jump off the moving average. Remember, I'm not going to try to sell that first pullback, right? Why? Because it's not a bear market. It's a bull market. Right? I'm going to look for those bears to try and fail and buy into those stop losses, right? I mentioned earlier. But if we do go lower, and if those bears can hold that pullback, 1, 2, right? 1, 2, 3 reversal, you know what I'm going to say, right? Mark that low, mark that high, and we're looking to get short off the high of that new channel, right? 1, 2, 3 reversal into a hidden channel pullback. I'm looking for bull traps. I'm looking for failure setups. I'm looking for pullbacks and strength moves coming off the high of it. Again, if you want to see a lot more examples of all of those entry patterns I'm talking about, it's all included in that free course, right? Find a little button up there in the upper right-hand corner, right? Again, 60 magnet below us, right? Weekend gap below us, some easy targets to find if we go lower. If we go higher here, right? If we go higher, again, think of this as a major area of resistance because it is. Right? So as we go higher here, can I buy a breakout going higher? I can if I can get a strong move up, a shallow pullback, a higher high. I can buy with a trap low, right? That is a great breakout pattern. We call those 2-try breakouts, right? Strong move up, shallow pullback, higher high in price. Trap low is definitely the best entry in that situation. You don't want to chase the market higher. I also do like to try to combine highs and lows and find those hidden channels. Not 100% necessary in all situations, but definitely not a bad thing to have, right? That confluence there. Or we might see that strong jump up. The buyers may hold that pullback. We may jump off the moving average. That confirms now we've broken through that area of resistance back there. Once I have that 1, 2, 3 breakout pattern, I can now mark up that high. I can mark up that low. And I can, of course, buy the first pullback, right? First test is the best test off the low of that channel. So a couple different breakout setups, right, as we go higher. And again, everything's pretty much pegged to that 65. There's not a lot more that we have up there when it comes to the oil, right? So, 64, 65, if you look at the big picture there on the oil. So got some big wide open space above us here if we can get a breakout on the CL. All right, guys, so now we know, again, that deep pullback, that 1, 2, back up to retest, or do we get that shallow pullback with that trap? Or maybe we get that deep pullback, they hold it, and they jump for a reversal. 1, 2, 3, reversal. As you can see, the plan is pretty solid. All we need right now is a few more candlesticks, and we can get after it here. So oil is looking good. How about some gold? Wrapping things up here tonight on the yellow metal. I'll tell you, gold is very similar. Like I mentioned in the introduction here tonight on this video, we're hearing more and more updates regarding stimulus, a multi-trillion-dollar, economic stimulus, the don't call it a bailout, stimulus package, as I always joke around with you guys in this video. But we know that is probably what has sent this market screaming higher here. And I say screaming because it's kind of what's gone on, right? The market ran higher. We got these nice highs here. You would normally mark up those 2 highs, bring it down to that low, and I'll tell you, 9 times out of 10, that is a great spot to look for a trap. But as you can see, we didn't get it, right? They never pulled back to it here today. And so that leads me now to believe that buyers are still, professional buyers are still waiting to get in on this thing, right? Lots of speculation, I'm sure, with this, again, COVID relief package. But we could definitely see the buyers a lot like on oil as the market went higher here today. And we definitely know we're bullish, right? So strong bull higher, strong bull trend higher, runs higher. Again, I had my channel drawn like this, right? Never got that pullback that we wanted. And it's just like on oil, right? It's just like on oil. In fact, you could probably draw the same kind of wedge that we're seeing here on, almost same thing on the oil, right? Here in the gold. So it's a very emotional market, right? We haven't seen much of a deep pullback. We can tell that, you got that first leg up, second leg up. It looks like that is the measured move. Now, there might be a little discrepancy here. There could be a leg there, leg right there. So it might be a little bit higher there. But, we're right at a very convincing spot here for a major area of resistance. So we're bullish, but we're running right into that measured move. That is resistance. We can also look left. There's a big top up there at 18, right, 18.14. But also, too, don't forget, we have a lot of really juicy levels waiting overhead here, right? Specifically, this 31.5 area, and then up at 18.56.6. And then, of course, from there, up to that big top at 78.5. Yeah, let's not get too far, get too carried away here. 78.5 might be a little bit too big of a bite to chew off tomorrow. But if they do keep this thing going here, that 18.31 area, is definitely looking like a very nice target here for those bulls. The problem right now is I don't want to buy into this measured move. So just like on the oil, right? I almost want to get a really nice deep pullback back down into that trading range, right? Market starts off bullish into a range, strong move up. If it pulls back all the way to those tops of that trading range, that's going to feel very bearish. It's gonna feel like this range acting as a magnet. But again, until those bears can run it lower, hold that pullback, and jump off the moving average, right? It's a bull market. So think about the same plan we talk about on the oil, right? If I get a shallow pullback, which finally pulls back to the low of this channel, if I get a shallow pullback, what's my concern? My concern is location. It's not momentum, right? Remember, there's two things I'm always asking our trade room. How is momentum and how is location, right? Right now, momentum is very bullish. What's location? We're running right into resistance. So the best way to buy when I'm concerned about buying high is a trap, right? So bears, of course, try once. Bears try twice. Get that trap low and let her rip. Right? So that's a really nice and, again, very consistently reliable setup. We get a lot of bullishness right now, no doubt about that. I just simply don't want to get too aggressive buying high. So a shallow pullback off the low of this channel, I'm looking for a trap. If I see a deeper pullback, though, now I've got some problems. Well, again, deep pullbacks are great for risk reward, but they've got some strings that come attached to them, right? Again, this time the range is a magnet, and that will be a very strong move down. Anytime we see a strong move lower, we have to be concerned that bears are going to come over and run it again. And so because of that concern, combined with that range magnet, I'm going to give those bears 2 tries to do it. Now, remember, there's a lot of variations of these types of what I call nested failures. I can draw a trend line off of that low, right? Buy off the trend line. I can simply wait now, right? If we don't get that deep pullback, I can simply buy into stop losses, right? Above that high. And again, you want to think about that trap setup before we get back up to retest the high, because those are very, very common. All right. So again, the plan here for tomorrow, if I get that deep pullback, let the bears try a few times, once, twice, right? Draw that trend line off the low. Okay, grab the entry off the trend line, grab the entry off the right into those stops. We'll obviously tomorrow morning, we'll do it together tomorrow, so you know the right way to do it. And then of course, right, that trap low on the way back up to retest those highs. Some really nice setups as we go. Again, deep pullback here. Now, again, if we get that pullback and those bears can hold on to it and jump off the moving average, now that is a 1, 2, 3 reversal pattern. Mark that low, mark that high, and we want the first test off the high of that channel. Again, maybe it's a bull trap, maybe it's a failure pattern, pullback pattern, strength pattern. You'll learn all those entry patterns and the basic trading rules in that link in the upper right-hand corner there with our free trading course. And again, right, if the market goes sideways up here, that is not a bad thing either, right? If we go sideways here up at these highs right now, it basically puts a stamp of approval on this market for the bulls. We find our level of support. We wait for that nice deep pullback. You've already got that swing low. You got that level there. We wait to come back to support below the range. We don't play the rookie game of trying to pick the bottom, right? It's tough to get lucky every day. We wait for bears to try to get short, right? And we use those stop losses to fuel the move going back in with a seller failure below the low of this trading range. So a great plan of attack here. If this market goes sideways, I would love it if it goes sideways. And if it wants to keep grinding higher, right? If you want to keep grinding higher here, I'm going to keep waiting for that deep pullback, that failure, and buy it back up. If the market jumps, right? If we jump, think about maybe we jump higher here. If we open up, right, market jumps higher here. Strong move up into that shallow pullback, higher high in price, trap low. What do we call those? We call those 2-try breakout patterns. Or maybe it jumps, it pulls back quick, and it jumps off the moving average. 1, 2, 3 breakout pattern. Mark the high, mark the low, and you got it. First test is the best test. So, man, lots of great opportunities if we get the breakouts. But remember, I'm not simply buying the break higher here. We're too high up in the ladder right now. I want to buy pullbacks. I'd like to get that deep pullback, right, coming off of those lows. We'll see if we can get it here down around that battle zone for tomorrow. And speaking of tomorrow, right, don't forget tomorrow morning is right around the corner. I would love to have you there, right there with us, right in the trenches, right, looking over my shoulder, doing this with me. You know, if you want to find more consistency in your trading, if you want to break those bad habits, I know all of us can have, right, as rookies, we build bad habits. I really focus on breaking bad habits and getting that consistency level back in your trading in our trade room. I would love to have you there right there with me here tomorrow morning at the opening bell. I'll put a link you guys need to get registered for tomorrow morning's trade room. I'll also put the free trading classes link in the description of this YouTube video. If you're on the blog right now at Sideways Markets, I'll put a big button for you guys, make it easy for you right below this video tonight to get registered for tomorrow as well. And don't forget, I'm going to be here all day today. I'll be here the rest of the evening. Don't be afraid to call the office if you have any questions. Don't forget, we got live chat on the left, live chat on the right. So hit me up on the chat box there, and I can answer questions there as well. I hope by now, though, you've subscribed to our YouTube channel. You can see I'm not messing around on this video newsletter. So make sure you subscribe, hit that bell icon so you don't miss tomorrow night's video, and hit that thumbs up button if you guys enjoy the video here tonight on this video newsletter. But that's it for me, guys. I've taken up way too much of your valuable time. Have a great rest of your evening. Last week of the month, we're going to make it count in our trade room. Hope I'll see you there tomorrow. If not, we'll come back and do it again tomorrow night on the next edition of our nightly newsletter. My name is Joseph. As always, be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.